Ethereum price annual forecast. Can Pectra upgrade push ETH to new all-time high in 2025? 1. Ethereum gained about 48% in 2024, underperforming major cryptos due to its declining revenue and inflation-related concerns. 2. The Pectra upgrade and Unichain's launch are two key events that could alter ETH's price trend in 2025. 3. Ethereum could rally to a new all-time high near $7,000 in 2025 if it surges above a 3-year symmetrical triangle pattern. Ethereum's ETH price extended its good run from 2023 into 2024, rising by about 48% to $3,390 in December. ETH somewhat mimicked its performance of 2023, posting a green first quarter that saw its price reach a 2-year high of $4,093. It declined from the late stages of Q1 and into Q2 with $2,817 as a key support level, before surging in May. However, the increase didn't last long as ETH resumed a downtrend that spanned into Q3, reaching the $2,817 support. This aligned with the historical crypto market's slow growth in Q3 due to the holiday season. Ethereum picked up pace in Q4, rising by over 50% between November 5 and December 19, particularly fueled by bullish sentiment surrounding the U.S. presidential election victory of Donald Trump. Many anticipated a higher price ceiling of $5,000 for ETH in 2024 following the ETH Exchange Traded Fund (ETF) launch and overall crypto bullish market cycle. However, it looks set to fall short of expectations due to the headwind of declining on-chain revenue and the inflationary pressure it experienced during the year. Going into 2025, a major contention among investors is whether Ethereum could break its all-time high of $4,868 as Bitcoin and Solana have done in 2024 before the overall crypto market bullish momentum cools. Ethereum 2024 Review. Dencun upgrade triggers Layer 2-centric roadmap. The Ethereum Dencun upgrade went live on March 13, improving the network with features from 9 Ethereum Improvement Proposals, EIPs. The most popular was EIP 4844, also known as Proto-Danksharding, which introduced binary large objects, blobs, space for Layer 2 networks to store transactions. Blobs are temporary storage space attached to Ethereum blocks where Layer 2 networks post their transactions for validation. Unlike call data, blobs are stored on the main chain for about 3 weeks, reducing the storage requirements and costs for processing Layer 2 transactions. Layer 2, L2, solutions improve Ethereum's scalability by bundling transactions off-chain and submitting a compressed version to the main chain. While L2 networks boosted speed and reduced fees to an extent, they initially posted these compressed transactions to Ethereum's call data, which permanently stores data on-chain. Permanently storing L2 data on the main chain resulted in significant storage costs. Network nodes passed on this cost to L2 networks, which ultimately trickled down to end users. This process constrained scalability and made transactions on L2s expensive compared to blockchains like Solana and Cardano. After blobs went live via the Dencun upgrade, it reduced fees on L2s by over 90% and boosted transaction finality. Most L2s became even cheaper to use than low-cost blockchains like Solana. Since the introduction of blobs, Layer 2 networks have become more attractive to users, with chains like Base growing their transaction volume by 525% between the Dencun upgrade and its peak in November. Overall, blobs made Ethereum competitive again and placed it in the class of next-generation blockchain networks. While blobs were a major win for Ethereum, it came with a challenge that hampered ETH's price growth in 2024: the ultrasound money scare. Ultrasound money narrative face risk from declining fees. In the London hard fork of August 2021, Ethereum developers introduced a burn mechanism that solved one of its most critical currency challenges at the time: inflation. Unlike Bitcoin, which is capped at a maximum supply of 21 million BTC, ETH supply was ever increasing as validators added new blocks to its network. Burn is a word used to indicate when coins are sent to an address where they can't be recovered, hence, permanently removing them from circulation. The burn mechanism was a strategy to curb this challenge and give Ethereum a competitive edge over Bitcoin. It works in such a way that a part of the transaction fees, paid in ETH, in every block is burned, reducing ETH's total supply over time. The process unlocked a deflationary feature that eventually turned into the ultrasound money narrative, which has become a major part of ETH's investment thesis. The logic follows the principle of scarcity. As demand for the Ethereum blockchain grows, more fees are collected, increasing the amount of fees burned. This reduces ETH's circulating supply and boosts its market price. Additionally, the yield, partly from fees, that investors earn from contributing to Ethereum's security through staking was a major way to keep coins out of circulation and help ETH's price grow. However, after blobs reduced L2 fees, weekly revenue on the L1 plunged. While this was the originally intended plan that developers set out to achieve, the reduced transaction fees have caused a decrease in revenue for stakers, plunged ETH's burn rate, and flipped the trend of supply reduction. The supply hike has weighed on prices and could be partly responsible for ETH's underperformance against Bitcoin and Solana. If the new supply growth trend continues, most crypto community members anticipate that ETH will return to being an inflationary currency and lose its ultrasound money appeal over time. Unichain's launch poses risk to Ethereum revenue growth. To add salt to injury, the Uniswap decentralized exchange, Ethereum's highest fee contributor and largest ETH burner, unveiled plans to launch its own Layer 2 solution in 2025. Uniswap currently accounts for a large percentage of the L1 revenue, with over 90% of its cumulative fees coming from settlement on the main Ethereum chain, per DeFi Llama data. The loss of such a major revenue generator to the L2 world could cause Ethereum to lose about $600 million in annual revenue. This could disincentivize validators and investors from staking their ETH holdings. Uniswap v1, along with Uniswap v2 and Uniswap v3, ranks among the top 10 contributors on the ETH burn leaderboard, making them significant players in reducing ETH supply. Since the introduction of the ETH burn mechanism, Uniswap platforms have collectively burned a total of 656,000 ETH as of December 19. With most of the transactions that cause such a high burn rate for Uniswap potentially moving away to Unichain, ETH supply growth could accelerate, increasing inflationary pressure and potentially weighing down on prices. However, some crypto community members, including Ethereum co-founder Vitalik Buterin, said that ETH could return to its deflationary trend over time as the scalability of L2s grows in popularity and attracts new users. The idea is that L2s boost Ethereum's revenue and annual burned ETH more than before the Denkun upgrade through economies of scale. As we go into 2025, investors need to watch how this prediction will play out and its potential impact on their ETH investments. Ethereum ETFs pick up pace in Q4. US spot Ethereum ETFs launched on July 23 after the Securities and Exchange Commission, SEC, delayed commenting on the filing of issuers for months. After the launch of Bitcoin ETFs in January, crypto community members expected the SEC to quickly approve similar Ethereum-based product filings from major issuers, including BlackRock, Fidelity, Bitwise, and 21 Shares. However, unlike the Bitcoin ETF process, where the SEC constantly engaged with issuers, the regulator delayed commenting on ETH ETF filings for months. With the delay, most experts expected the SEC to deny issuers' applications. A possible reason for the negativity was rumors that the SEC was investigating firms related to Ethereum and the Ethereum Foundation regarding the potential classification of ETH as a security. However, the SEC seemingly made a U-turn on May 23, requesting issuers and exchanges to update their registration statements. The updates reflected issuers removing words related to ETH staking from their filings as the regulator was reportedly uncomfortable with the feature. The SEC eventually approved 9 Ethereum ETFs for launch on July 23. In the first few months of launch, outflows from Grayscale Ethereum Trust, ETH, significantly outpaced inflows in the other 8 products. However, since Donald Trump emerged as the winner of the US presidential election on November 5, the exodus from Grayscale's ETH has slowed, and inflows into the other 8 ETH ETFs, particularly BlackRock iShares Ethereum Trust, ETHA, have accelerated. Ethereum ETFs have attracted net inflows of about $3 billion between November and December. The recent inflows have been instrumental in boosting their cumulative net flows to $2.47 billion on December 19. Most analysts expect issuers to update their ETH ETF filings with the SEC to include staking in 2025. Bernstein analysts said the upcoming new SEC administration under Trump will likely approve issuers to offer staking within their Ethereum products. If the SEC acts accordingly in 2025, it could significantly boost the appeal of Ethereum ETFs and, in turn, cause an equivalent surge in ETH's price. Ethereum in 2025, the year of Pectra upgrade. After Denkun, Pectra is the next key upgrade that's set to introduce new features from 20 EIPs to the Ethereum blockchain. The upgrade, a combination of previous Prog and Electra upgrades, is aimed at improving the wallet experience for users, boosting security, increasing staking rewards, speeding up smart contracts and improving scalability. According to Ethereum developers, Pectra will be deployed in 2 phases, with Phase 1 set to go live in 2025 and Phase 2 coming up later. While the initial plan was to ship all the upgrades together, Ethereum core developers split the process into 2 to make the transition less cumbersome and reduce the risk of shipping both. The first phase will feature about 10 EIPs, while the others will ship with the second phase, known as Fusaka. Some of the notable upgrades in Pectra Phase 1 include 1. Account abstraction. Allows users to batch transactions together to pay one-time gas fees, sponsored transactions where third parties pay fees for users, payment of fees in any ERC20 token, account recovery options, etc. 2. Blob expansion. Increase the blob target in Ethereum blocks to boost its data availability capacity and reduce fees for Layer 2 networks. 3. Zero-knowledge proof upgrade. Improve how Ethereum processes zero-knowledge cryptography to unlock additional privacy, security and scalability benefits. 4. Staking upgrade. Increase the maximum balance of validators from 32 ETH to 2048 ETH to maximize earnings. Reduce the validator set size and enable flexible staking withdrawals. 5. Steps to Verkle trees implementation. Tweak the execution layer to allow the generation of proofs of historical blocks from the state, which holds all the information about Ethereum accounts and their associated smart contract data. Read this Galaxy research report to learn more about the upcoming Ethereum upgrade. The changes from the Pectra upgrade could significantly impact the network activity of Ethereum and, ultimately, ETH's value. Ethereum Fundamental Outlook 2025. Key on-chain metrics to look at. Historical in, out of the money. This measures the profitability of addresses and coins on a blockchain network. The number of profitable addresses increased from 80.61 million, 75.6% of total addresses, at the beginning of the year to 115.03 million, 89.44% of total addresses, on December 18. Meanwhile, addresses experiencing a loss represented only 7.07% of total addresses, with the remaining 3.5% at break-even. Prices often correct when such a high percentage of addresses are in the money as traders opt to realize profits. Furthermore, during ETH's volatility over the year, the range between $2,074 and $2,517 served as a key support level as it represented a historically high demand zone where investors purchased 61.5 million ETH, representing over 51% of its total supply. This is a critical price support zone to watch out for in case the market flips bearish in 2025.
Friends, thanks for watching. Please subscribe my channel for more videos.